Welcome to Better Credit, Better Home. Your source for the latest local and national news that can impact you if you are in the market for real estate. Here are your hosts, the Kingwood mortgage guy, Mike Durr, who uses his 25 years as a mortgage professional to help people improve their credit, and Joe Salas, an accomplished home inspector, real estate agent, and trainer of new agents for Byrd Property International. Together, they will help you understand what you need to know to get the most out of your real estate investment. Let's get started.
Together.
Let's do it.
All right. Well, Joe, it's so good to see you today, my brother. I am kind of flummoxed a little bit with the interest rates are unbelievable.
They're going to hit 8. I have a feeling they're going to hit 8.
Well, I spent most of the day defensively locking loans. Really, that's what it is. The ADT came out with a report today, and it was negative report, right? Because the mortgage bonds love negative stuff. So this was a ADT report that said that jobs were, instead of expecting 155,000 new jobs, there were only 89. And the mortgage bond market, for the first time in 10 days, maybe 12 days, said, hey, we like that. And so rates actually got a little bit better, but the rates before I locked those, before that report came out, were in the high 7s. And I mean, 8% is there. I mean, it's just right there. And there's another big, the Bureau of Labor Statistics comes out with a follow-up jobs report Friday, and it scares me to death. I mean, honestly, normally I would wait for something like that to lock a rate or at least look at it. But both my loans are closing next week, and they've got to be locked before we can get stuff out. And it's I'm telling you, it's like I'm freaking out. No, I'm not really freaking out. But it is. It's not like I want it. You know, I want to give everybody the best rate we possibly can. So anyway, that's what's going on in my world. What's going on in yours?
My fingers are purple.
Uh-oh.
I did a rough frame mechanical inspection today. So part of my process of inspecting a house during that phase of construction is I'll go around the house as I'm doing my inspection. I'll spray a little purple spray paint and then write a note where the deficiency is. It does a couple things. One, it helps the CM and the contractors not have to have the report in front of them, so they can see what is deficient on site and then correct it. It also helps my clients whenever they go back and do their pre-drywall walk with the construction manager. They can see the purple paint and then ask whether or not that deficiency has been corrected.
Yeah, has that been fixed yet? Yeah.
What's exactly. Up with that?
Cool. All righty. Well, good. So here we go. This is kind of what the whole premise of this started with. Rates are up. It went from there to homeowners aren't going anywhere. And then I started thinking about what are home buyers doing. And it's not just first-time home buyers. They're predominantly going to home builders. Mm-hmm. And that led me on a path to there's been a lot of reporting that the home builders are kind of waffling a little bit too. They're not sure whether they should build full bore and go 100% all out, or because of the rates, that's going to soften the market a little bit. So they're kind of stopping and starting, which creates a problem for demand. Or it actually not a problem for demand. It's for inventory.
Supply.
Yeah. So anyway, I was looking for data to confirm my thoughts on that, and I came up with stuff, and I thought it was pretty good. I'll let you guys be the decider on that. But, oh, man. Anyway, the name of this, I don't know why that sinks down there. 3 ways to keep home buying cost as low as possible. 3 ways to keep home buying costs as low as possible. So I started off with that premise, and then I thought, but really what anybody that's buying a house wants to know right now, and I go through this mantra every time I'm at a closing and I work. I like to go to my closings. I don't go to all of them, but I like to go to them. I go over the 2 of the 3. I'm going to go over 3 of the 3 today that are how to keep the cost down. And I think this is something that any home buyer would want to know, but I don't think very many of them do know this. So, and I know you know this stuff, but anyway, that's kind of where I'm going today.
Let's do it.
You want to go along with me?
I'm ready, man. I'm always down for a little bit of knowledge.
All right. So here's what we're going to cover. Mortgage rates are increasing, kind of like what I said. Current homeowners aren't selling. Builders are building as fast as possible. But when I put that in there, I didn't realize that the builders are building pretty fast, but they're building strategically in areas where homes and people are moving. So we'll see that in a minute. There's more buyers than sellers. Inflation is still a real deal. I mean, it's one of the main reasons that people are moving to the South is because it costs more to live other places and it costs less to live in the South. People are making choices with their feet, but because of their pocketbooks. Southern United States real estate is reaping the benefits. And so the overall premise of this is Texas and probably Louisiana, probably Arkansas, anywhere along the Gulf Coast area is going to reap the benefits because we're just less expensive area to live in. And people like hot, humid weather. I mean, that's what we get. We get hot and humid weather, but it's at least not cold. So here's one of the things I wanted to show is this is choice for current homeowners based on the premise of that people that own homes aren't selling them right now. So an existing homeowner payment, let's say they've got a $300,000 mortgage and it's at 4% or less. I use 4% because I thought it'd cover a lot more people. Principal and interest on that would be at $1,432.25 if they're in and around the 4% rate. Figure taxes about $625, insurance about $250, total monthly payment $2,307.25. Then looking at, and this is being kind of optimistic too, a new payment on today's mortgage rates, a $300,000 mortgage at 7%. Principal and interest is $1,995, and that's where the difference is right now. The taxes are going to be what the taxes are. Insurance could be a little more than what the existing homeowner has, but I just figured it'd be the same. But the difference between the 4 and the 7% is $563.66. And those are 563 reasons why people aren't going to move, because even when they're moving and they're trading their mortgage, maybe they have equity, but they don't want to have a bigger mortgage than they've got now. They'd be paying basically $563 more a month to live in a home that's probably not that much different, because the home price, the home that they're going to be buying is going to be more expensive than theirs was.
Yep.
So it just makes this is. I wanted to give just some clarity to why those people aren't moving, and I thought that was a reasonable place to start.
It's crazy.
Yeah, I mean, really, if the rate was like I've got a 2.5% interest rate, and so it even magnifies it when it's lower. And then if people were locking today, it magnifies it on the other end because rates are higher than that right now. So crazy stuff. Anyway, I tend to wax on a little bit there. So this one just interest rates, and this shows a chart from 2010 until 2023. And there is I've got another chart. I didn't put it in here, but it shows the average rate for the last 30 or 40 years is just under 10%. So we're still in this. You see this chart. The blue is the mortgage 30-year fixed rate is in that 7, just tickling above 7%. Right? What'd you see?
This reminded me of a chart I saw earlier in the week that had it going back to 3000 BC.
Oh,
And they said that we're coming out of historic lows as far as interest rates, and really and truly, if you look at the whole of history, we still are, even at 7 and 8, we still are around what the average rate is, if you look at it. But yeah, it's shot up definitely in the last couple of years, in the last year.
well, and I remember when I first got in the mortgage business, this was in 1997. The interest rates that we had were in the 12.
Yeah.
So, I mean, it was like, what the heck? Anyway, so love charts and these just, it's just kind of a visual confirmation of what's going on out there. It's not just happening to one person, it's happening to everybody. And, there is going to be a time when they're going to go back down. We're convinced of that. Now, this is what I thought. This is in this this Texas housing. Let me put it here. Yeah, Texas Housing Insight from Texas A&M, and it had all these charts in it. And this one, it shows Texas versus the United States and the single family housing construction permits. Now, this is what I think is wild, is that there are more permits in Texas than there are in the rest of the United States, or at least have been. And you can see it's starting to dip a little bit because we've been on, the builders have been on a tear, but that has been the answer to buying houses, 25%, maybe a little more than that, maybe 28% of the people that are buying brand new houses. And you're probably seeing it just from the ones you're inspecting.
Yeah.
And it makes sense. But I think a lot of people would prefer, if they could, to buy an existing home. That's just what I'm thinking. All right, this is about supply, and these are regional housing starts. So again, they broke it down a little bit more from the Northeast, the Midwest, the South, and then the West. And again, if you see the colors, the Midwest, or actually the South, the colors, the top bar there is the South, and it just shows that where people are getting permits and housing starts are in the South. And Northeast, less. You add all three of those up together, and they don't add up to what's going on in the Texas area. Right. So the premise behind that is not just detailed. It goes, what does that mean, right? And two things to me. It says that, one, people are moving to the South, and Texas in particular, and Florida is part of it, Mississippi, Arkansas, Alabama, but Texas is getting their share where they're appealing and attractive place to live because of the economy and the weather and all that other stuff. That means that the appreciation is going to continue for a while. It's not going to slow down in the near future. And the reason I think that's important, and I think it's great news, even though home buyers might be going, enough with this increasingly more expensive houses, but that's exactly why you want to buy a house, because it's going to appreciate. And not everybody can get in. And I'm sorry. That's just part of the deal, is not everybody is going to be able to qualify or has the money or the job to buy a house now. But the people that do are going to benefit from that. And if the stock market, if the stock market and the housing were side by side, and somebody said, well, the stock market's going up, that's great news for the people that own stock. And in this case, it's great news for the people that own homes. And so anyway, I think it's important to kind of bridge that gap. Now, this breaks it down even further, and this is why I really like this particular report, is it's got Austin is the red, DFW is the lighter blue, Houston is the orange, which is the top line, Phoenix is the kind of the middle one there, and then Charlotte is the dark one on the bottom. And again, this is top new home metros since COVID. And what this is basically showing is what we're saying consistently. This is just statistical analysis from the Texas A&M University Real Estate Group. It shows that when people are making choices, they're choosing Texas overall, and they're choosing Houston a lot. And Houston's got a lot of positive things going for them, particularly jobs. And that is, and of course, the cost of living, I think, is pretty
the lower cost of living. I'm wondering what the boundary lines they use for Austin is, because there's a lot of development going around Austin and like the Bastrop area and between San Antonio and Austin, New Braunfels area. So I think that line actually probably would be a little bit higher if they took into account the whole of the suburban area of Austin. In my opinion.
I don't disagree. I mean, Austin is just blown up, really. And all the way down to New Braunfels. I mean, it's really affecting New Braunfels. You'd think New Braunfels would be closer to San Antonio, but I think the reason for the growth, well, probably both, but the reason for the growth is probably more Austin's popularity than San Antonio's. Even though San Antonio is a very popular place also. Again, one of these charts I went, yeah, I love that chart.
Right.
All right, so this is Texas major metro medium single family monthly rent. Now I threw this in there because I think that this is going to speak to people that saying, well, I can't buy and I got to rent. Well, it's not great news, because this is a chart that goes, it looks like from about 2010, maybe a little before that, all the way up to 2023. And there's a pretty consistent trend that rents are going up. Now, I don't care what one you're under, but it does look like, besides San Antonio, Houston, like San Antonio is the lowest increases. Houston's the second lowest. And of course, Austin and Dallas are probably considered one of the more popular places. They're kind of hand in hand, really. I would think Austin might even be better or stronger than that. But again, since we service the Houston area, we service all of it. I just did a deal this week in Arlington, but Houston's my hood, if you will. All right, so I probably have this chart in every presentation I do from now on. just because I want to stress it for somebody that might miss it. But this is the one that shows the appreciation year over year from 1942 through 2022. And the bottom line is, if you look on this chart, you'll see either from appreciation almost every month, every year, and not every month, but every year, and just a very few places where there was negative appreciation with real estate. And it's hard to beat that. I mean, it's hard to argue with that. If there is something that we have that we're promoting, we need to show why. And this is historical data that I think is pretty solid. And of course, the resource is Case Schiller, it's not me. MBS Highway picked it up. I got it from them. I just think it's a good thing for somebody if they're going, gosh, this guy keeps talking about real estate. Well, here's why. It works.
Well, there's a term called land banking, and it's investor type people that don't intend to even live in the house or rent it out or the property. That they'll buy the property just to hold it for the appreciated value that they'll get year over year, so that they can get a return on their investment in the property. It's called land banking.
And this area, I think I've shared with you the land that I bought and sold way too quickly this last year, but I did really well on it. I look back in hindsight, I wonder if that was a right thing to do. But this is a pretty good chart that's similar to that last one. And what it does is it shows the time period between 2006 and 2010, really, these charts. And this is a look at what the inventory was like in millions. And the time when the depreciation happened was at the exact time when we had an extra amount of inventory. And that goes back to the very simple business. It's supply and demand. When we had too much supply, guess what? It affected the overall market there's just too many units out there. And I'm sure there were very specific smaller areas that paid for that more than others. But anyway, it's part of the deal. I'll get through that real quick. So here I think is really important. And my headline, where that one was too big, is how to keep housing costs as low as possible in like 3.5. Well, I don't know what the heck. I've got some kind of gremlins in my PowerPoint. But It's about interest rate, real estate taxes, and homeowners insurance. Now, I am going to be one of the very few, there may be others, but there's not many, that will tell you how to get the best interest rate. I'm also going to tell you what you can do about real estate taxes and how you can save money when you get homeowners insurance. All right. Are you ready for that? Let's do it.
That's good.
So how do you get the best rates? Well, I tell people this all the time. Yep. But I like the thing on the right, the little slide that says we offer 3 kinds of services: good, cheap, and fast. You can pick any 2. and I'm not going to tell you that we can't do them all good, cheap, and fast, but there is a sacrifice when you give up one of those. And we try to do all 3, but I thought it was funny. So it's my 6th sense of humor that it goes there. But I'm going to tell you right now, and nobody else can tell you this, you shop. Talk to at least 3 mortgage companies. All right. Now that it hurts me to say that because I just want you to talk to me. But to get the best rate, you talk to at least 3 mortgage companies, get their explanation for why they're proposing whatever they're proposing to you. And the key thing is you got to find somebody you can trust, that you believe is going to take care of you in a manner. It's a fiduciary. Joe talks about fiduciary from a realtor standpoint. You've got to do what's best for you. Okay, that's what you're looking for. That's one. Okay, you're going to shop. You're going to talk to a couple different people, and you're going to get quotes from them. Then you're going to choose. The next thing you got to do is you got to make sure that your credit is as good as you possibly can get it. Okay, don't go into this and just like all of a sudden say, oh, I'm going to buy a house. You got to say, okay, what's my credit like? Because if you have better credit, you get better rates. The people that pay back the best get the best rates so that they don't have to pay as much. Okay, if there's risk to the lender, it'll cost you in your interest rate. Other things, make sure you've saved enough money for your down payment and closing costs. If you have down payment, bigger down payments will sometimes buy you a better interest rate. And then the last thing is make sure you've compared the different loan programs to make sure that the one that you're being presented with is one that fits what you're trying to do. Okay. So Joe, what did I leave out?
Well, you mentioned buying down points, but that's something that we can help with on the realtor side is identifying that a house has been on the market for a while. It may be overpriced and working that into the deal so that the sellers offer or we ask for seller concessions for closing costs, which could be used to buy down points.
I love that. I completely forgot about buying points, and I was thinking about this on the other side. So thank you for adding that. I think there are good times and bad times to buy points. It's a math equation. Depends on how long you're going to be in the house, what you can buy them down at. So definitely a question that I would put on my list is it make sense or does it make sense? Does it make sense to buy points? That's another way to get the best rates. Absolutely. Good question. What else?
I think you hit the big points. What do you got on your mind? You got anything else that you left out?
No, because if I had it on my mind, I would have just put it.
Right.
But I like the points idea. Again, currently what I'm telling people is I'm not a big fan of points unless it helps you qualify. Like there's some people that go right up to the max on their debt ratio, and they may need to buy points down so that they qualify. That's a good thing. The other thing is you have to understand that when you buy points, you're basically paying prepaid interest in advance, right? In an effort that you're going to pay less later on. And so you want to make sure that when you look at it, you look at how far out you're going to get your money back for that interest that you paid in advance. So I think those are important things. And again, if it makes sense, yes, do it. If you get closing cost money from the seller and you have enough money for your own closing, it's a great way to use that money that the seller gives you. Okay, so that stuff, again, that mortgage guys don't like to tell people to shop. I'm telling you to shop. It's a good idea. So how do you reduce your real estate taxes? Well, this is something that is it's a big deal. Real estate taxes are manageable if you manage them. If you just don't pay attention to them, and I think in many cases people just let it go. They don't think about it. But the first thing you got to make sure that you do is you get your homestead exemption, and you also look to register for any potential exemptions you might have. And the two that come to mind are, if you're a vet, you get very good exemptions. If you're a disabled vet, you get it could be a zero real estate tax. And then the final one is the over 65 is a very good exemption to take. So you want to find out what those are and find out what you qualify for, because it can dramatically reduce the cost of your home, particularly today.
Yeah.
Make sure when you move into your new property that you take pictures of everything. And if you had an inspection, I'd say keep that inspection handy, because you can use that inspection when you go to challenge your value that the county appraisal district has. They want evidence, something you might not have thought of. I closed a loan a couple of weeks ago, and I said, take pictures of everything around that house. It's both good and bad. Okay. Make sure you do not share with any county entity or person the purchase price.
Yeah, don't do that.
They have employees that the main purpose is to find out what you paid for that property so they can tax you at that rate. You don't want that. And you also don't have to give that to them. And they have been as aggressive as to knock on people's doors. So they'll send you notes, they'll call you. I'm telling you right now, you do not have to tell them anything. And then finally, make sure you challenge the value of your property. When you get that county assessment, usually it comes in between April and May, usually probably the end of March, April, and May. And you're going to just have your mindset that you're going to challenge it, because it's like a war between the county wanting to get more taxes from you and you wanting to keep from paying too much taxes. And I'm okay with paying taxes, but I don't want to pay any more than I need to.
Right.
And that's what I tell all my borrowers. And there are some people that just, it's not in their mindset. It's kind of outside their world. They pay their mortgage, they go on down the road. I'm telling you, this is something you pay attention to, particularly if you're going to be a homeowner. You got to pay as little as you possibly can.
Yeah, and just to remind any viewers out there, the county calculates the taxes based on the rate that's set and the value of your home. So I was at a meeting this morning, and they said that the tax rate actually is going down in Montgomery County. But that doesn't necessarily mean that your total tax bill will go down if they increase your house value to meet or exceed what it was, your previous tax bill, what it was the year before. So,
well, yeah, that's exactly right. I mean, it's about the value of your house. The rates have been pretty consistent, and actually they're working to getting them down. But that doesn't mean you're getting any less taxes, because the value of homes is trending up. They know that as well as we do.
Yeah, and I saw some people without the homestead exemption get a 30% year-over-year increase from last year to this year.
Yeah.
So
yeah,
definitely get those exemptions done.
The homestead exemption is kind of interesting, because I've done some loans where the over 65 or the VA credit was in there, and so the people that are selling the house were reaping the benefit of having those exemptions. And one of the things that has been done recently is they've allowed new home purchasers to file the exemption the same year that they bought the house. But that's not always a good idea. Did you know that?
Why wouldn't it be a good idea?
Well, because the people that were in the house prior to you, which the county thinks are still in there, may have a less of a tax obligation than you would as a first-time home buyer without any exemption. You'd have a homestead exemption, but you may be giving up the over 65 or the VA exemption. So then you wait until the first of the year so that you can file that. And then, of course, they're going to find out ultimately. So you find out, you do it after the tax year is over.
Interesting.
Little tips, little subtlety things make you money. All right. So how do you get the best homeowners insurance rates? How do you like my picture? Whoops. What are those stupid? They got these stupid oil changes.
Can't park there.
Yeah, anyway, I thought that was pretty funny. But homeowners insurance is, at this point in time, is going through some kind of crisis, and the rates for homeowners insurance and automobile insurance is going up also, to a point where I think they're gonna have to do something. Something's wrong with it. But the same thing like you're doing a mortgage broker, you want to talk to multiple providers, okay? And there are companies like USAA that are really good, and there's Progressive, and there's this, that, and the other. My preference, I like to have the independent agent, the guy that you can call on a basis where he can say, "Oh, hey, Mike, how you doing? What can I do for you?" As opposed to a customer service person that doesn't know you from anybody. I like to be able, when I'm walking in the grocery store, if I see my agent, I can say, "Hey, dude, what's going on?" And just talk to him. I like that kind of relationship. But that doesn't mean that that's going to be for everybody. That's just me. Make sure, again, your credit is as good as you can get it, because insurance carriers look at your credit when they're determining what kind of rate that you're going to get. It's not a huge thing for them, but it is a factor. You also want to make sure you get the deductibles that you need. Now, right now, there's some options that you have when you're buying insurance for a new home, and they go from less expensive to more expensive based on what the deductible is. So you just need to make sure what your comfort level is with how much of a deductible you have. I tell my little story is that I've lived in the same house for 32 years. We've never made an insurance claim on our house. Matter of fact, in all the houses we've ever lived in, I'm not sure I've ever made an insurance claim. So this is insurance. It's probably something you're not going to use, but when you get it to protect yourself from the big things that happen, not from the little things. And so just keep that in mind when it comes into play, is when you have big issues. At least that's my philosophy on it. And finally, make sure you compared the different quotes to make sure that you know exactly what you're getting covered. Okay. I'd asked my buddy Chris Boyer, who is a local agent here, both him and his dad. His dad runs the company, and he couldn't make it today. I think he's going to try to make it next week and talk a little bit more about insurance. But Joe, talk to me about what do you know about insurance?
It's going through the roof lately.
Yeah.
Yeah. I was reading something about Florida the other day, where it practically tripled on somebody that bought a home in 2016 to today.
Yeah.
So when they first bought the home, it was somewhere around $3,000 a year, and now it's $9,000 a year.
It's crazy. Yeah, I think that's what's going on here. I asked Chris about it, and his dad told me one thing. He said, first off, we're paying too many claims out. And I'm going, well, isn't that what the insurance companies are supposed to do?
They don't like to do that, Mike. What are you talking about?
Well, that's right.
They like to take it. They don't like to give it.
I don't know if anybody's heard the radio commercial for the guy named Eric Dick. Eric Dick. He's a local attorney, and he takes insurance cases like this when those greedy insurance companies don't want to pay you what you're supposed to get. And Steve Boyer specifically mentioned this particular guy because he's got a lot of ads out there. And then the other thing that I didn't ever think about, Chris told me this. He said when an insurance company has X number of coverage in a certain area, they don't want 100% exposure to that area. So if they've got the best salesman in the world, and he goes into Kingwood and everybody that he talks to, he writes a policy on. They don't want that. They want to have a proportionate coverage level for any specific area. And at a certain point, they quit writing insurance, or they price it up to a level that they're comfortable with. I don't know. Had you ever heard that?
No, but I don't doubt it. That sounds like something an insurance company would do.
Those greedy guys.
Good thing this dude's not on the phone call today, right?
Chris will be here defending himself. That's right. Yeah, I'll get him to watch it. That'll be fun. All right. So I think I did this one. That's my old chart. This is the one from 72 to 23.
I'm gonna see if I can find that one that I was looking at that went all the way back to 3000 BC, man.
I'd love to see that. So this is the chart that I did from last week, and as this goes down, you can see that this is actually the last couple of days in September, and so it wasn't in October. From this date, it's continually gone down even further until today. There's the first update that we've had in 2 weeks, maybe almost 3 weeks. And then I started doing these rates, and it almost sickened me. But the 30-year today, 7 3/4. This 15-year is not correct. I got disrupted, and it was more than that. And so the only thing that's really on there that's correct on this one is the 7 3/4. So hopefully it turns, but I'm telling you, it's been, all my optimism has been squashed. It's been deflated like a pop balloon, and I don't know what to think. And you may be right.
This is the new normal, Mike.
Yeah, it is. Joe, leave us with some pearls of wisdom. What do you got for us?
Let's see here. Look both ways before you cross the street. Go to church on Sundays. No. Let's see here. I think that today actually drove it home, right? For me, what I was doing prior to this call, this lady called me and she said, Joe, I'm building a new house with a builder in town, and I'd like to hire you to do the phase construction inspections. I said, yes, ma'am, I can help you out. So I went and did her inspection for the pre-pour, which is before they place the concrete and, before they pour the concrete, and everything looked well. And it seemed like everybody was on board as far as the contractors, et cetera. Showed up today. And even though I would say this is one of the better houses that I've seen as far as a rough frame mechanical inspection, it still had issues. And the biggest takeaway from that is once those problems are covered, right? Once they're covered with insulation and drywall, you won't necessarily know those issues exist until they manifest themselves either through other systems or through becoming more of a problem as they exist there. So I caught some roof issues for bracing today. I caught some electrical issues, missing outlets at the communication box where they're going to plug in their modem. That would have been a huge deal because they would have had to cut sheetrock to install that, missing nails at joist hangers. The list goes on. But, get your house inspected, especially if you're doing construction from the ground up. Don't just get that final inspection. Have an advocate for you as the homeowner, the future homeowner, and use my knowledge to help protect your investment.
That is a genuine pearl. That's a great one. All right. Well, thank you for being here. You honor me by coming and showing up on a consistent basis. And I sincerely appreciate you and the work you do. And I want everybody to call Joe. He's the right guy to call. All right.
I appreciate you, man. Thank you for having me.
All right, guys. Thank you for showing up. We look forward to seeing you next week. And other than that, like us, subscribe us, and share us. We'd love that. And we appreciate all those things. Okay. Thank you. And that is it for today.
See you next week.